Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Rolled on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I think I'm getting worse at like being on time because like I'm starting the stream on time today, but I haven't eaten. So let's go to the chart. So we don't have any like bottom of the hour news today. So let's just come in here. The treasuries are a little bit lower today. Yesterday was quite there was a lot of back and forth, right? But ultimately we ended we ended right in the middle where we started. Now in the overnight we're a little bit lower, and there's still a lot of this European hawkishness kind of effect going on over there. In the ES, they pulled out an okay day. It was looking like the bears were going to come out really hard, but in the end the bulls won, although it was not, they didn't make very much progress. The overnight is looking okay too. Now oil is coming down. Apparently there's been a big story about a bunch of things going on with OPEC that could increase supply. I'm not going to pretend to understand all of it, but it kind of suggests that because of the Russia situation, they might be allowed to just put out as much oil as they want, and the UAE may be increasing the amount that they're putting out, and yada, yada, yada. So that's what's going on there. Natural gas kind of doing its thing as well. Gold and silver pressured again. So it's just like, they're ever going to get back to 1900? I don't know. It doesn't look so good at the moment. And then we got copper moving up. It sounds like China is, easing restrictions. So everything's going good over there. Then we'll come over to currencies. Bitcoin, up a little bit higher yesterday. But I mean, it's really still just like the higher end of that range, and it hasn't gone anywhere since. So I feel right now in Bitcoin that you're probably okay to be buying it somewhere through here, but that there's very, very high risks, especially the risk of stable coin regulation coming through the cryptosphere. And then we've got the 6E. Well, sorry, we got the dollar. The dollar's still relatively strong and was actually stronger overnight. So we got that. Sorry, I got a little distracted there because I can hear my baby upstairs. Yellen and Bernanke illustrate the mistake of putting academics with no financial risk-taking experience in charge of decisions. In addition to skin in the game problem, I was wrong comes with no punishment. Nassim Nicholas Taleb commenting on Janet Yellen saying, I was wrong on inflation. Well, I don't know. This is more the problem that I see here in this market, and the thing that I see people remembering is that they're making this out to be like it was a straight call on whether inflation was going to continue or not. And I think it was more complicated than that, because the decision to let the economy continue to run hot because of fears of future pandemic runs was a major factor, and they also got that wrong, because the effects of those further waves was not as strong as they thought, and the monetary effects ended up being inflationary. So cool. All right, so I've got some food here. Let's try eating a little bit. I am starving. Oh my gosh. Okay. And we'll keep an eye on Twitter here. And good morning, Killer. What are you up to? Good morning, Octavius. That's a pretty big iceberg there, 6K at 119.06 half. That's kind of reminds me of the old days. That's about what a mid-sized iceberg would be like, right? Oh, you know what? So I'm just noticing here, was not really paying attention to our docket this morning. But we do have Bank of Canada rate statement at 8 o'clock, as well as US ISM manufacturing. So that might explain why, the treasuries seem a little bit quieter and more constrained this morning. I just realized PewDiePie moved to Japan. Dude, have you noticed, like, I don't know, maybe it's just me, but like I used to get PewDiePie videos recommended to me on YouTube all the time, and now it doesn't. And it kind of feels to me like YouTube doesn't want him to be the most popular creator anymore. Am I wrong? Kind of seems to me. Oh, you got recommended as like the latest vid? Okay. Well, maybe I'm wrong. I don't know. I've been noticing more and more lately. I think maybe part of it is because of Elon Musk complaining that Twitter has been hiding his tweets. But like, I'm just much more aware about how uh, content gets presented to us. Like, what YouTube shows on the front page to you is like really important, or rather, it has wide-reaching effects on society. And I'm really concerned in particular about like these content holes, because I get this thing where like I'll be researching about an issue, And then all of a sudden, I find out that there's like this whole community of YouTubers pushing one side of this issue, and you only see one side of the issue. The algorithm only pushes one side, and you gotta wonder what the effect of that is, especially on the kids, right? Because they get so much of what they know is coming from YouTube. I'm really annoyed that if I choose to look at one Mike Tyson fight, I get flooded with Mike Tyson videos, but it's how it works, right? And it sucks. Yeah, like here's the thing is that these machine learning algorithms that they're using to make recommendations are incredibly flawed and naive. And the scariest part about all this is that as flawed and naive as they are, they're still really effective. Right? Sargia Ortega. Good morning. How are you? Haven't seen you in a while. And it is Twitter is a little slow this morning. They are stupid so much for machine learning. I like you really gotta realize, guys, that like machine learning is so much in its infancy. It is really quite crazy, right? Like it's been around for a long time, but like really Google itself, excuse me, the entire Google algorithm and how they ranked pages in the beginning that kind of got them ahead of the game back in like the early 2000s, let's say. That all is based on a machine learning algorithm, basically. I mean, it's like all of this matrix calculus sort of stuff, right? Um, but it's been around for a long time. But then more recently, they've been able to apply these machine learning techniques to a very wide array of use cases. And then they went and they started making all these Python libraries so that utilizing these machine learning libraries without any understanding of the statistical properties of them is really quite easy. And so we are very much in a case where our understanding of machine learning and what we can do with it is so naive, and the models that we're using are so naive. But like even though they're really naive and basic, they're still incredibly powerful, right? So, but I feel like that it has a tendency to send you down a rabbit hole. And I don't know. I'm a different kind of person, right? I'm hyper logical. I'm very and that's mostly because of the medications that I'm on. And I'm also very disagreeable, which is, that's just my personality. And I'm just like almost as far as you can go on the scale of being disagreeable, right? So the way that I react to it is probably different from other people. And I really wonder when you get a kid that's kind of agreeable, you know, how influenced they're being. Because really, well, we used to be so concerned about what our kids were picking up from television, but we never really had stuff on television that was like blatantly influencing them in a certain direction. You know what I mean? And I've seen my kids go like wildly on certain political issues and stuff. Like my stepson, when we first met him, he was like a hardcore Trump supporter, and now he's kind of starting to go liberal. And I'm like, that doesn't, on one of those 2 points, he was probably being unduly influenced by YouTube, right? Good morning, Tobias. Everybody's kind of filtering in. Just as a reminder, we do have Bank of Canada rate decision, and we've got some other key numbers at 8 o'clock. So we're kind of getting one of those days where the treasuries seem quite constrained on the open. Wall Street Journal tweets Shanghai celebrated the end of more than 2 months of lockdown as China's zero COVID strategy snarled logistics and supply chains. Treasury's pushing the higher end of the range now, and the 5-year in particular coming back with a vengeance. I continually see, so we kind of saw this yesterday, and I'm starting to see it again today. So I think we want to kind of pick up on it early, but we've been seeing the spreads do stuff, and it seems like maybe it's flattening and then it will steepen back out really hard. So we should keep an eye on that one. This is interesting. So Scott Adams tweets, "We learned two things this month. Everything you suspected was true, and 2, no one will be held responsible." And then he lists a bunch of issues. Clinton ran the Russia collusion hoax. Voting machines are hackable. Transitory inflation was a lie. Mask mandates don't work, per New York Times article. Actually, I saw Nassim Taleb tweeting about that one, and he was contradicting some of what the New York Times was saying. And Biden family equals crooks. I don't know if I'm not sure what the specific piece of information we've gotten this past month that's making him refer to that last one. But the first two are a little like, I've definitely seen that, and I'm a little bit like, well, okay. Now they're just like outright admitting it. It's a little weird. KSL tweets, Utah County Sheriff's Office is seeking out victims or people with information about ritualistic child sexual abuse in the area since 1990. What? That must be like fundamentalist polygamists, marrying off 14-year-olds or something. That's crazy. That's a crazy headline to read. And of course it's Utah. No, I'm not getting this from the main news squawks, but I'm getting this from somebody on Twitter. Russia cuts off natural gas supply to Denmark in escalation over European energy amid the war in Ukraine. Also saw today that the Biden administration is going to be providing the longer range missiles to Ukraine, which Russia has specifically noted as something that they would consider to be an escalation. So got that going on. Gold is taking off. Last 15 minutes or so, gold doing really well and the dollar getting hammered a bit. Is that perhaps also why the treasuries are moving to the upside, is because the 6J is getting some relief? I do feel that 2.9 is it's on the higher end of the range, right? So I don't necessarily want to be trying to buy a breakout there. Janet Yellen at the Fed is equivalent to having a biology school teacher who has never seen blood perform brain surgery. I'm not so sure that I agree with all that. Like, I don't know. Let me think about it for a second. I'm gonna go put my plate away. Okay, we're back. Like thinking of it like from the central banking is like you can't make central banking a performance-based job. It doesn't work, right? And the thing is that they're not really like it's a collective decision that they make, right? It's the board talks about it and agrees on a strategy, and their strategy is very mechanical in many ways. There is discretion involved, but there's a lot of mechanical components to it. And they're not always going to get it right. So like I'm not so sure that it's fair to come in and say Janet Yellen, as the Treasury Secretary, screwed up on inflation and therefore should be fired. Because number one, I'm not exactly sure what it is that she was supposed to have done differently as the Treasury Secretary. And number two, like, you can get it wrong one time and still be a good fit for the job, right? And while I would like to see like a Jamie Dimon at the Federal Reserve, right? There's not. I wouldn't say that having like economists in there is like strictly bad. She was very qualified and very knowledgeable on what's going on. Okay, well, the treasuries have backed off just a tad there as they've gotten to the higher end of the overnight range. We definitely did see the dollar make a move there. It's kind of moderating now, and so all of these assets like gold and 6J are kind of doing a pullback as well. So why is Twitter promoting this fellow? Martin Shkreli? Well, probably because he knows that you're going to enjoy his content, right? I didn't know that he had a Twitter. He's out of jail now, so. Twitter. Has he tweeted recently? No. Nope. He has not. But you know what? I will come in here and we'll put him on our list so that if he does, we'll know. According to Goldman Sachs, retail investors have sold all of the stocks that they bought in the last 2 years. Well, you know what? Probably for most of the stocks that they were buying, they were all these popular stocks. Probably was the right thing to sell them. Right? Cumulative net buying of US stocks. I bet you, because this is like retail buying and selling, I'm gonna bet that some of this was people just taking profits and like deciding to retire or whatever. Okay, so the treasury is pulling back actually quite quickly. That was like a 10 point move back very fast. So if we get involved in this, I'm really gonna need to be focused. I'm not so sure that making a move at the current time is the best thing. I'm not 100% sure why the dollar is moving as much as it is. So FX Street News says gold price eyes new multi-week lows as key support falls. But yeah, except for that, we just had a really strong rally in gold. So first squawk, Iran's foreign military spokesperson in Tahis, some city I can't pronounced says Iran will respond in a strong and appropriate manner to any unconstructive action at the IAEA's Board of Governors meeting. I am expecting some trend continuation today, and the index's bearishness is still pretty high, and I think a lot of people still want to short into this, says Tobias. I'm not so sure. So, I mean, we're a long way from the S&P 500 opening, so I guess any kind of order flow that I see right now is probably irrelevant to that, right? The thing is that yesterday we kind of expected bears to try and come out, and they didn't really show up, and then the bulls took it, but the bulls didn't take it very far, right? So I think that there's still a chance that some bears come out, and especially, we've got, what is it? We've got the US ISM manufacturing PMI, and we're looking for a reading of 54.5, that could really that could be a piece of news to really roil the markets. We also got the Bank of Canada interest rate decision, which, based on what I'm seeing here, the market seems to be, concerned about. I'm not so sure it makes sense for me to try and take a trade here in the treasury now. I think that I could have bought it at one point. In fact, down that pullback, I could have bought that and made the $10. Of course, now that I'm saying that, that just means it's just going to run and run and run, right? But, I got, I don't know if the exact moment is the best setup. Like, even when I look at the volume in the 10-year, it's not that consistent on the upside here. So we are about to get red book here. Not a news event that we really ever see market responses to, though. I think what we've seen so far is like the treasury is following the correlation. Now, maybe here above 10, maybe we start to see like some real treasury volume come into it. Okay, so the red book year over year was 12.6 versus the previous 11.4. No estimate on that one, and market doesn't typically react to it. So, seeing a lot of people tweeting about Elon Musk memo to Tesla staff: return to the office or leave the company, please. Which is an odd one. I thought that he was pro work from home. But whatever. Should I be jumping on this thing? Kind of feel like I missed my opportunity, the optimal opportunity for it, They're like, hit into 2.88 reset so that we can reverse it. First Squawk tweets: solid platinum rises 3%. Really? The biggest mover that I have on my board right now is gold and the 10-year, followed closely by copper. 1% today. Copper's the furthest move. Well, no, I take that back. Oil is the biggest move, 1.5. So I'm kind of getting a little bit of like disinterest from market makers, but continued pressure from the treasuries. Hmm. Not completely the way that I wanted that to go, but I'm thinking it's okay for maybe a little bit more. Well, we should look here. This is kind of looking strong. Okay. So right here at 12 is the overnight highs, or the last swing high rather. With the momentum that they've had going into it, and I mean this is really starting to look like a strong meta order. I wouldn't be too concerned about that line. And that could very easily just take us to like yesterday's point of control at 14. FTH volume is so low. Well, it has been. I would say though that it is definitely starting to pick up here in the 10-year, isn't it? I mean, there was a couple thousands all the way through this. And the change in cumulative delta that we've seen here now is almost oh no, it's not almost. It's over 10,000 contracts long now. Are you talking about the video between Daniel Inskeep and Trades by Matt? That the video you're talking about, Lucas? Yeah, yep, I did watch that. Um, so I made a video responding to one of Daniel Inskeep's videos, and I tweeted it out to him, and he did respond to it. So I think that means that he watched the video. I think he was kind of saying, well, maybe some of this is a little over my head, but I think that's what he was kind of trying to say in his tweet. But I don't know. I wonder. It seems like Daniel Inskeep definitely like trades, but it's on and off, and it's not quite as serious or dedicated as you probably would want to be to really be successful with futures. And they're extending through here. Like this is not letting up in the 10-year so far. There was a little bit more volume there at 12.5, but that was probably just the break of the previous swing, right? So now you're getting into 14. 14 was previous day's point of control. Okay. So a little bit more liquidity at 14. I don't know. I don't like look, Matt is really good at taking on risk, right? I wouldn't I'm concerned that not everybody that watches that understands that it's mostly the taking on risk, and that as such you kind of have a serious risk of like, oh my gosh, that whole trade that I took it on sim accidentally. Suck. That was a good trade. Oh well. Hold on a second. The new squawk is talking in my ear. And this is going through, so it's kind of looking like I probably could have held it even more, or maybe even get in again. I'm a little bit thrown back by the aggressiveness of this move. Yeah, okay, so I'm concerned that not everybody that watches Matt's channel realizes that the majority of the profits that he's generating over there are from taking on excessive risk. And I'm a little concerned that it seems like he will, have a period where he does really well and then he'll just completely blow up and everybody kind of like ignores it. I don't have anything against him personally because it seems like he's trying to be genuine about it. And I think that he's just got, he has taken the path of the take on a lot of risk per trade so that you have a high win rate, which, it's not like that's an invalid strategy. It's just that what that does is it creates a strategy that's more likely to fool you, right? So, but the thing is the ability to, be able to put the risk on and make money from it is an important skill, and it seems like he's better at that than myself, right? Because I often have this issue where when I really should be pushing it, I don't, right? So, I'm so mad that I took that trade and I forgot to switch the account so that it was live because it was a good trade. Here right now, it looks like that there might be a little bit of fuel, but I'm not sure. I'm concerned that like I get in now and they maybe go another 10 and then come back, and so it might be hard to get a profit out of it now. If you're letting 1 to 3 unrealized 2 lot NQ get out of hand, yeah. That's well, but that's what's going to happen. Is it's creating fatter tails, right? You get lots of tiny wins and then like a really big loser. And the really big losers are more rare, so it takes more data samples for you to realize what's going on and that it doesn't work. But then when it doesn't work, that's the thing that really bothers me, is that like when something like that doesn't work, instead of saying, "Oh, okay, maybe this strategy is not a good idea," instead they say, "Well, it was me. I was impulsive. I did X. I did right." So you're getting like some insane confirmation bias from it. But, like that's just the way that it goes in the trading, right? Like the reality of it is that there is some very well established quantitative finance stuff out there that I think you can utilize in your trading, and it's not going to guarantee it that you're going to be successful, but I feel like that at the very least you have a much better idea of what's going on. And the majority of retail traders, as well as we're doing at the sharing this information in the channel, and I'm really proud of those videos that I made. I think that they're really well done videos, but most people find it too boring and they don't really pay attention to it. So it's always going to kind of come down that way, that there's a lot of what goes on in futures trading is just people gambling, essentially. So there's that pullback, just like what I was afraid of. Although they could be coming back through. So like there's a little bit of liquidity at 119.16. This is like painful for me to watch because I had the trade, right? I screwed up, made a mistake. I haven't made a mistake like that in a while, but it's a good thing that it was a mistake that like you missed out on money rather than losing money, right? A misclick or something like that. That's usually how it goes. When you make money, it's because you're a good trader, but when you lose it, it's because of psychology. Nothing good will ever come out of that approach to trading. Yeah, no, I agree. Like, so for me, my results have been like pretty, lots of little winners, a couple of big winners, and then I'll have like one day that I do poorly. And it's like those one days are like all of the losses, right? And I don't think that it's just like Seth is off, right? There certainly are some situations. There's been a couple of situations where I took those trades and I really didn't have a very strong um driver to make me think that they were going to go a certain direction, right? And so it was really silly for me to take those trades. So there is some degree of Seth being stupid in those losses. But I also think that there is there's also a fundamental um drawback to the way that we're trading, and that is that if you're not the informed trader, uh it can really screw you up, right? If you don't actually understand what's going on, if there's something out there that's really important to the movement, and you're just not paying attention, you're clueless, you didn't catch that piece of information, and you try trading against it, like that can be devastating. If you don't specifically understand why a trade went wrong, there's nothing to work on and improve upon. No deliberate practice. Yeah. Well, and further to the point, um, you've if you've really got to have a reason to think that the thing that you're trading on is actually going to work, right? So what I keep seeing over and over and over again is people trying to apply price action, and what most people call price action to me looks like um, Dow theory applied on short time frames, right? Uh, Dow theory doesn't work on short time frames. Is my backtesting conclusion. I was looking at a video the other day by uh, Kevin Davey, and there were kind of some price action strategies, and he said, well, I did this, and it looks okay, but it's not a complete strategy, and we would need to take it further, and so forth, so on and so forth. But I was like, well, let's try back testing it myself, because some of them were interesting. Like one of them was if you get X up bars in a row, or you have out of the last X minutes, X percent of them are full candles, right? He was doing setups like that, which I think are great setups. Like I think that the cool thing about those kinds of setups is that they're really clever quantitative ways of looking at price data. But I'm hyper skeptical that over a long enough time period that you're really getting enough edge out of something like that for it to be worth trading. But it's testable, and I think that it does fit under the category of price action. So I think that I should try back testing them myself. So it was a couple of years ago, so maybe the stats have changed, and maybe we need to look at it. He was basically saying, well, we need to look at it a little bit deeper. So let's look at it a little bit deeper, right? But I see so many people out there trading off of this, like these price action concepts, that they really don't have any reason to believe that these strategies would actually work. And then what they do is they take on excessive risk so that they never have to face that question, right? Because over here with the way that I trade, right? If I'm trading and I go through a month where I only win 30% of the time, what does that mean? that means that I don't understand this market. And I have to face up to the fact that what is going on in that particular economic environment, I don't understand what is driving the flow in that particular economic environment very well, right? And there's no hiding from it because my risk reward is roughly equal. So that's really the only thing that matters, right? Is how well I understand that market. Can't hide from it. You know? That's that's why I like trading that way. It's not like taking on excessive risk. I mean, if you were a quant firm, right? You had something that really worked. Like I'm gonna bet you that the guys over at Renaissance Technologies, that they have a lot of those strategies where their average winner is much smaller than their average loser, right? But they're able to do that because they have data that really conclusively shows that there's an edge to that thing. They could probably trade it with an equal risk reward and still make a lot of money. But when they really amp it up by taking on risk, then they really get more profits from it, right? But that wasn't the point of that. I got a little bit carried away because, I get so concerned about people not understanding the risk taking part of it. But like I said, risk taking is a part of it though. And Matt has done really well with it. So I don't think that we should just completely, like that channel is so bad, you shouldn't be watching it. You're all dumb if you think that that's like the pro and that sort of a thing. Like it was an interesting video. It'll probably get some people interested in trading futures that wouldn't have otherwise. I think it was balanced because they did kind of show that, hey, like when I do it, I lose like literally every time. you know. Binance raises 500 million fund to invest in Web3 as crypto slides into bear market. That's odd. If the next crypto suddenly crashes and Ponzi scams start to buckle under pressure, crypto, we better raise more money. Our exchanges are so wildly profitable, but for some reason we have to raise money every time our Ponzi scam blows up. As a more science data oriented guy, why did you never go into options? I think that the primary reason I've never gone into options is because from what I understand about it, for me to really take advantage of that sort of stuff, I would need to be trading like $1 million account. And it would be managing a lot of different positions and doing a lot of complicated stuff. Like, I think that to do that sort of a thing, it would make a lot more sense to go and be a quant for a firm if that's what I wanted to do, Like that's the thing that's kind of interesting about the way that we trade. Like the professionals are always doing some form of arbitrage, really, or at least that's kind of their goal. Is if you want to be in the game forever, right? You want to last, then your risk basically has to be zero. That's why a firm like a Goldman Sachs has been able to be around for so long, is that they take as little risk as possible. And when they see that there is more risk in the thing than they anticipated, they're immediately out. They're always the first ones to sell on that sort of a thing because they are way more, they're scared of it. It's scary to them, And how do they do that? Well, a lot of it involves like I could come in here and I can trade the treasury and I can trade it outright. But what they're going to do is they're going to be like, okay, we'll buy a treasury, but then we'll sell one in the cash market to offset it. except for that it gets even more complicated than that. They're like selling options and different spreads of it and everything like that to kind of give themselves as neutral of a position as possible so that they're just making money off of the market making part of it, right? So that's cool, but you need a lot of money to do it. And it's not the same thing as being the person that comes in and says, well, this is the way that orders are going to be coming in, and this is how prices should be adjusting, and being the one that's, like really trading and saying, okay, this is what something should be worth based on the information that we have, right? So, but really, lack of capital is probably the biggest barrier. If I had $100,000 account, I would maybe play stocks more regularly. But there definitely is opportunities in stocks from time to time. This is coming back really hard. But another side of this is that my knowledge of data science will seem really advanced to your average trader, but I still feel is incredibly naive and basic, Oh, no, I know. Just for the thrill of it, thought you would enjoy learning and reading about options. The possible. Well, I mean, I know a lot about options. I tell you. And one of our next videos, I don't know which order they're going to come out in, because I recorded a video. I think I might be able to put it out next Monday. There was some parts of it that I was a little unhappy with, but we might just go with it. It wasn't a huge deal. Nobody will care. But then we're having the baby this weekend, right? And then I've got 2 other videos that I'm working on with some sponsors. And then I got a 4th video on bonds. So, but the one that maybe comes out on Monday, we're going to talk about gamma and the options and all that sort of stuff. So, I get into it. So like I was like an example of where I kind of look at things and I'm like, oh, I'm not very there. I wish I had a more advanced knowledge of statistics, right? It was like I was reading a psychology study and they were doing like covariance. It was one of those studies with a bunch of covariants. So it was like, okay, we want to see what effect this factor has, but we know that there's all of these other things that could affect that. So we have to poll for those factors and then run the math with the covariance to try and eliminate those factors to see how much this one particular thing actually factors in. And then they give you like p-values and all of this sort of stuff, right? And I mean, I kind of understand it, but like not enough that I could go down in Mathematica and, with the data set and pull those statistics out myself, like, just like that. It would be like a 2-day project of figuring out the right way to do it was, right? It was really frustrating because I was reading a study that I was quite skeptical of. I don't want to say what it was about because it's a controversial issue, right? But I was like, there was some statistics in it that, well, for starters, it was an internet survey. So that right there just kind of makes you, you have to question if it's really a good data set. But then there was some statistics that they put in the data set that I was like, that that doesn't really jive up. Like, I don't know if that's really that gives me very strong reason to think that maybe this study is no good, right? But like, I'm looking at that and I'm like, okay, so if you include like 12 different covariants, doesn't that kind of make the statistical significance of your results less reliable? So how do you sort that thing out? When it was basically like I tried reading Nassim Taleb's book about it a little bit, but there again, it's like I don't think that he was talking about that sort of a study specifically, but I'm not aware enough of all of the math terms and everything to, you know, I'm just not quite there on that. It's like I could be, but it needs to be like some a few years of dedicated study. Okay, well, the treasuries are moving back up slightly. The dollar is still kind of um stemming its fall. Gold hasn't come back much at all, but I'm a little we've seen this a lot lately where you get a big move in the beginning and then that move like almost completely retraces. I'm a little worried that that could happen again. I'm a little weirded out by how dramatic of a move up it was. Just a little. Just a little weirded out by how strong up of an up move it was. So, and we got Bank of Canada decision here in like what, 5 minutes, right? So clearly not a good reason to go through. Yeah. As you said, you could ask a quant guy to walk you through formulas and jargon. I know I would. Yeah. Well, yeah, we need somebody that really, really understands that stuff really, really well, right? We can do some of that. I don't know. I think I have some time to kind of learn more about the machine learning and statistics side of things. In terms of videos right now, it's probably not the focus, right? The focus right now is get the most important information for what we do here on the stream out and get content out that will broaden the audience. So, because if we're able to broaden the audience, right, then that would give us opportunities to be able to spend more time on that, and that would give us opportunities to work with people like that really know what they're talking about when it comes to the statistics and stuff, right? Sorry, did I say that the Bank of Canada thing was at the bottom of the hour? I think I did say that, and I don't think that's right. It is at 8 o'clock, isn't it? Yeah, Bank of Canada rate statement. I guess. Oh, what's this? I guess Financial Juice has a live stream about it. Yeah, it is. Oh, that's cool. He's going through last time that we had the Bank of Canada decision, how it affected the different currencies and stuff. So yes, but we will have the S&P 500 open, so that's a key point. Perhaps why, well, not perhaps why. I think that, you had a leg of a meta order there. We're probably in the post meta order impact right now. It looks like it's probably going to settle somewhere around 1314. If we say that the meta order ended at 708, that would mean that we wouldn't be getting another leg until the later end of the hour, and then you've got the 8 o'clock news. So I'm not so sure that we're going to see another significant move until after the news. I remember when I used to not open my trading desk during the summer. Did you read John Grady's blog yesterday? Because he was kind of talking about that. I don't know what prompted his blog, but I think he's right on. It's like summer trading can really, really suck, and a lot of people just hightail it during the summer. But we're also in a situation where there's probably going to be some opportunities in the summer. So it's going to be like a really frustrating thing where a lot of the time, like right now, you're going to feel like nothing's going on. If you do try taking a trade, it's kind of frustrating or you have hard time catching it. But then if you really are patient, every once in a while, you will get like a strong move. It's going to be like very intermittent and hard to know when those times are and when those times aren't. I really wonder how effective John Grady is at catching those and then not catching those, because from the way he talks, it sounds like he's not concerned about whether it does those things, that he can adjust very easily. And I think that's like the hardest thing to do, and I'm skeptical about anybody that would really be doing that really consistently unless they really had really solid information sources, right? Like if you had all of the resources of a big bank behind you. There will probably be speed on Friday. Well, yeah, because that's going to be non-farms, right? I'm sure that with tomorrow's jobs numbers, there will be stuff too. I'm probably not going to trade the jobs number. I don't know. I'm trying to pull back on risk. If you notice, like I'm coming back to, it used to be like, oh, okay, well now that I can trade micros, like maybe I could trade like 4, 5, 6 trades a day more regularly. But it's not been. It's turned into I maybe take 1 or 2. And if I'm taking more than 1 or 2, I'm probably doing poorly. From the webinars I attended, I can say he was really, really good at managing trades and risk. He was mostly break even though. Yeah, well, so it seems to me, I don't remember. One time somebody showed me a video of one of his webinars, and so I watched through it, and I was mostly focused on what he was saying, and it was kind of stuff that I felt like I already knew. But I didn't really watch how he was taking the trades or managing them, and I don't think he was taking very many trades. But I remember more recently he did a video with Futures.io, and he was showing stuff, and I was really shocked at how little room to breathe he actually gave it. It was literally like he was trailing it by like a tick basically. So any degree of pullback whatsoever would have gotten him out of a trend, and so he was really looking for the fast, quick move, which, yeah, most of the time probably would leave you break even, right? Well, the move back that I was concerned about came through. So where does that put us now? Yes, and it's hard to know how much of that is due to having an audience and not wanting to screw up. Yeah, but you know what? Like, John Grady's performance is not something that I'm too concerned about. Because here's the thing. If somebody comes in and they say, here is a pattern that I see in markets and you can take advantage of, right? Every time that there is an outside bar followed by an inside bar, you can take a trade in line with the 50-day or the 100-minute moving average, and you'll win X% of the time, right? when somebody's making claims like that, and they say, well, you should, the first thing that I'm going to ask is, okay, so like, did you back test that? How do you know that that happens? Right? And then you're going to say, well, I'm a profitable trader, so you should just trust me. And that's when I'm like, bullshit, show me your numbers, right? Now, the smart people, the people in the space that you probably should listen to, never make a claim like that, because they know that the instant that you start to make a performance claim, and unless your average customer meets that kind of performance, the FTC has a reason to fine you, right? Basically, if you are in your advertising, your promotions, you're promoting certain profits, and those profits are not indicative of what your average customer is going to make from it, which is never the case in trading, then you can be fined. And that's how warrior trading got fined, for instance. So the better policy is to just not make performance claims, frankly. Right? Okay. So John Grady doesn't do that, though. What John Grady does is he says, like, here's something that happens, and here is kind of like the whole thing around it. You notice in his beginner book, he doesn't say, oh, okay, when this happens, take it long and you're always going to win. In fact, he says quite the opposite. He says, okay, here is catching the edge, and here is the lure. They're opposites of each other. And the setup basically looks the same, and the difference between them is how they play out. And here's why they play out the way that they do, right? So he's giving you like real information about why the market behaves the way that it does, without making a claim about how he performs with it, or how the longer tendency of the market is beyond what is just observable from the actual structure of the market, right? So I'm not so concerned about what his I don't care what his performance is. It may not be very good. The information that he shares in his basic course stands up on its own, right? You don't have to look at what his performance is to know that it's good information. You can tell that it's good information just from reading it. He tells you all this stuff that you need to know to get started, to be able to like do this seriously and get set up with a broker. He gives you, he explains to you how the order book is working and the patterns that no question actually happen, regardless of what is the best way to trade them, right? And something that you don't see anywhere else. And that's why I think that his content is really good. I mean, it's interesting to me. It would be interesting to me to be able to look at his trading results, but in the end, I don't think that it's really particularly relevant to us. It's just like a curiosity, right? Because ultimately, what are we concerned about? We're concerned about what the facts are about the market, not how well other people have actually done. Looks like the tech sector has really come back now. Well, I tell you what, the S&P 500 saw a pretty strong buy impulse right on the open, and that is often a really good sign that a strong trend is going to come through. So far in the S&P 500, it hasn't really drawn out, and the cumulative delta has not been quite as indicative of where price will go recently. So I think that we could put a little dampener on that, but looking for a large buy impulse right on the open is something that I really keep an eye on. I suppose that if this turns around and this ends up being a bear day, that would be a significant thing that I want to watch, because like the really strong buy impulse on the open and then it trends all day sort of a thing. That's something that I really only started to notice happen during the pandemic, right? So I believe the market is trying to price higher rates overall, and buying we've seen has been the recession hedge meta orders. I think that the specifics of what you were saying there, I might be a little mixed up on, but I think that the general thing that you're talking about, I think, is true. I think that the market was very overvalued because of low interest rates, and the market was extremely skeptical that the policymakers were going to do anything about the interest rate, and were caught off guard when they did it. And so when they did it, they had to adjust all of their valuations. And that was largely responsible for the acceleration of the dip. And then on top of all of that, you had options gamma really pushing them, right? So they probably overdid it. But there are, like, Warren Buffett has been buying a bunch of stuff, which says to me that there are portions of the market that are incredibly undervalued right now. There are probably still some areas that are, I don't know if you can say, like, all of these meme stocks and unprofitable tech stocks are, like, overvalued per se, because, like, some of them might go to zero, but I don't think that it makes sense to be going short them right now. You know what I mean? You expect another move down in September, October. Well, I don't know. It's going to depend on the next month of data, right? Because I think what we should see in the next month's worth of data is we really had a really strong impulse down in the data. Okay. Like, all of the economic surprises were to the downside, and it wasn't good, right? And we're really at the moment to quite extreme levels. So I would anticipate that in June and July, those numbers moderate a little bit, right? And so even though there might be some market volatility in September, October, as the markets are wont to do, with the way that things are right now, that would still be like a secondary dip, pullback, normalization sort of a thing, and not a 50% decline in the S&P 500. We're in a bear market. We're in a recession sort of a thing, right? But I think what's likely to happen is we kind of go sideways for the summer. That data kind of moderates, and then sometime at the end of the year, there's another rally. When it's like, okay, the inflation moderates. Like, this is the best case scenario, but I do think that it's kind of like a more likely scenario at this point is that, inflation does moderate, and the Federal Reserve gets interest rates to 2%, and then they're like, okay, cool, we can just leave them here for a really long time, and then the market will rally and do really well. What I think ultimately will happen. But there's always a chance that China does another round of lockdowns or, crazy things like that, and then all bets are off. Okay, well, the S&P 500 is still looking mostly up, but they did have a little bit of a bear hit there, I guess you could say. What's this? Ooh, I need to look at this. This is a video that will cut out all of the silence in your videos. $79. $59. That would be worth the money. I'll run it on my most recent video with the trial. And fully functional but limited to 5 exports. Okay, I'm down. We're gonna do it. If this works really well on my next video, then I'm gonna be all in it. Or they make a move towards Hawaii. That really scares me right now, man. Because like it seems absolutely insane that China would try and invade Taiwan, but they clearly want to do it. I don't think that they would do it today. It would be a really foolish thing for them to do. But they want to. They want to. I don't think that she is that crazy, though. No, I don't think that he'll actually do it. I think that for a time there was kind of this question about how much solidarity the West would have in supporting Taiwan in a fight against China. But I really think that people get the Russian invasion of Ukraine thing wrong. I think that the Russian invasion of Ukraine makes a Chinese invasion of Taiwan less likely, not more likely. I think that the smart people in China are looking at this and are saying, well, we definitely don't want to have a complete embargo against us, right? But they definitely don't want the kind of sanctions that they're putting on Russia to happen against China. That would be devastating to them and everything that they've worked to build. So I think that I don't think that they're going to move into Taiwan. They're going to, if China ever makes that move, they're going to wait until it's to the point where there's literally nothing anybody can do about it, right? They're just going to incrementally push and push and push, but only push enough that nobody actually does anything about it. And in the meantime, they continue building up their military and pushing towards this goal. And eventually it gets to the point where it's just so obvious that they can take it and nobody can stop them in time. And so they're going to go and do it. And then everybody just kind of goes, well, what are we going to do? And so they just let it happen. That's what's much more likely to happen. Which is kind of almost more sad, but... So when we were coming down there at the bottom, remember me saying, well, I don't know if this is one that I want to trade. I could have done okay on a trade there though. So, well, we still got 15 minutes to the more significant news. Can you do order flow trading on crypto? You certainly can. So the full book data is much more available in the cryptocurrency space. But there's a lot of problems with trading in the cryptocurrency space, right? There's a lot. There's pretty high commissions on your trades, and you have a really, really big risk on it. So apparently there's like micro Bitcoin futures now through who is it? Fair Exchange. But I personally I have no interest in trading those. No sir. I the further along this gets, the less and less I want to have to do with cryptocurrency. Like I have my Patreon where I post my cryptocurrency chart. It's like $5-10 a month. A lot of people during the pandemic canceled their subscriptions, which was kind of funny. It was like all of a sudden everything went to pot, and so they all canceled they probably canceled all of their Patreon subscriptions, right? But we still have a small dedicated base of subscribers over there. But like I'm no longer in this mode of like, if it gives me a perfect entry, I'm just gonna YOLO all in, right? I don't want to do that anymore. Even if I think I can make money on it, I feel it would be immoral for me to do so. I think that the way that we invest and the way that we trade matters. And I want to be sure that the way that I'm doing it is a way in which is beneficial to society. And I do not feel that cryptocurrency is beneficial to society. I'm more and more convinced every day that is a plague on mankind, and that the sooner regulators do something about it, the better. So I still, as long as people are subscribing, I'm gonna be posting at least once a week, and I have to say the model is still really useful. I think that I overfit a little bit on it, but it's still providing some useful information. So you can go and subscribe to that if you'd like. But I'm just very disillusioned with the cryptocurrency space. I think another thing that really plays into that is that anytime I decide to comment on Bitcoin on TikTok, I get so much bullcrap in the comments, like spammers and stuff. High number of problem with cryptos is high number of exchanges. Well, having high number of exchanges is another issue too. But if you're trading some altcoin, for instance, that's not necessarily as big of a problem. But it kind of comes back to like the whole predictor of order flows sort of thing, right? What do you really have in the cryptocurrency space to lean on as a predictor of order flow? It's everything is so speculative over there, right? And I think that the issue I have with it primarily in terms of scalping is that the risks from adverse excursion and the degree of the kind of move that you will have against you in cryptocurrency far, far outweighs any edge that you might be able to find through predictors of order flow. It's a terribly inefficient system. I don't see how people can see it as a payment system. Well, I mean, that's the crazy thing, is that like they really don't see it that way anymore. So I was on there was this picture on the Bitcoin subreddit, I think it was, and this user was complaining about a coin that its primary purpose is to transfer money between exchanges more quickly, right? And the guy was like, I don't really see the point of it. Like, why would anybody buy this? Because there's no reason that this should continue to go up or anything, right? It was like, well, this isn't a Ponzi scheme, so why should I invest in it if it's not a Ponzi scheme? It's like, really? So it's gotten to the point now that the current generation of cryptocurrency people are actually harp on a cryptocurrency if its primary use case is for it to be used for transactions. Like, what? If it's not a Ponzi, I don't want anything to do with it. It's just... And then, yeah, it's in a time where there's like real concerns about energy consumption, and like there are large portions of the United States that are likely to have rolling blackouts during the summer because they can't produce enough power. And then we've got this huge cryptocurrency mining thing going on in Texas. It's not good, guys. It's not good. Fiat currencies is also a Ponzi scheme. Okay, so I'm gonna say no. So what differentiates a Ponzi scheme from anything else? Because really, when you think about it, like a Ponzi scheme is basically the people that are making money from it now are making money from new entrants into the system, right? And in any stock, that is kind of what happens. So what differentiates a stock from a cryptocurrency Ponzi scheme, right? And the difference is that there is fundamental value behind it in a stock, right? The stock represents a share ownership in a company that produces real goods and has real future earnings, right? So like something real actually is being produced. Okay. So then we go to fiat. You say, well, okay, but what is that with fiat? Well, what that is with fiat is that's the fiat is backed by the full faith and credit of the United States. And the United States does produce things. The United States does have a GDP where goods and services are regularly produced and put out. And that is what is backing up the currency, right? So it's like a bond on a stock, right? Instead of there's not, you can't own direct shares of America. I wish you could, right? But what you can do is you can own bonds that America puts out, which is, America issuing debt. And that's essentially what our currency is. So it is backed by something. It's not a Ponzi scheme. Now, there are some situations where the amount of bonds that they're issuing relative to what they're producing is out of whack, right? But that is all done out in the open. We know what all of the numbers are. They announce what's going on, and the market acts appropriately, and it's beneficial for them to modify those properties to set us up for a favorable environment for the economy, because these sorts of things have a tendency to like go one way and just get out of whack until everything blows up, right? So they can come in and they can inject and remove liquidity from the system to try and moderate those crashes and make them not as extreme. Doesn't seem like you can get rid of them, but you can dampen their impact. And the last 50 years or so of central bank policy suggests that it is actually effective at doing that, right? No, there is a fundamental value. The fundamental value is the economy of the United States, right? As long as the United States has a gross domestic product, right? If we went a whole year and we didn't produce anything, and there was the GDP of, the overall GDP of the U.S. was zero, then that would be different, right? Now gold is kind of an interesting case, I think, because there is something backing up, gold. I mean, it's a physical asset. It's a physical thing. Okay. So I don't think you could say it's a Ponzi, but like why should people want it? Right? The only reason people want it is because that's what it's been historically. That historically there's people have wanted gold because it's pretty and it's rare. So it's not a gold is not a Ponzi, but in terms of how it would fit into an investing portfolio, it kind of comes into the same situation as a Ponzi, that in the long run, you don't make very much money by holding gold for long periods of time. But there could be some situations where you can predict that people are going to come into gold, and it could make a valuable part of a portfolio. But I wouldn't be holding it for like 30 years. That one doesn't work. Like, I think that they said that if you held gold over the last 500 years, that you're only making like 0.1% per year, or something like that, right? People should want it because you can actually trade goods and services for gold. I'm not. So you go to the store, unless you live where I do in Utah. I think you're gonna have a hard time going to the store and paying for your groceries with gold. It's the amount of actual use of gold as a transaction medium is incredibly limited. It only has value because it's all in people's head. You know, if several thousand years ago they had decided that platinum was the real standard, then it would be the platinum standard, right? Or the uranium 238 standard. There you go. Now if uranium 238 was the currency of choice, right? Then maybe we would actually be going somewhere. Oh, that would be weird. That would be so weird. No, it's not going to happen because it's radioactive. I don't know what the isotope is that's highly radioactive, but you get what I'm saying, right? Just because Walmart don't take it. Well, if you can show me a video of you making a gold transaction, I'll give you a gold star. Like a gold star like this, like I'll draw it here on the screen. There you go. There's a gold star. But that's not yours yet. You haven't shown me. You haven't shown me the video yet. We got about a minute and a half until the Bank of Canada thing. So the treasuries have definitely consolidated here in this kind of neutral area that we had identified earlier. I am surprised that they moved back down as far as they did, but they did float back up into the hole. So not a real gold star. In Utah, they have a law that makes gold legal tender. So supposedly you should be able to go to the store and pay for stuff using gold, but in practice you really can't. I've seen Bitfinex is retweeting, or not retweeting, but posting something else he saw. Boomers thought Luna collapse would take down the crypto industry. Instead, Tron, Waves, and other chains are still working hard on next-gen algo stable coins. Okay, there's the move. So it was a hike. There was a big old massive order there at 10.5. I don't know if a 50 basis point hike as expected is really a strong reason for me to come in and sell the treasuries, but they are moving. Okay, jolts higher than expected. 11.4 versus 11.3, and USM ISM manufacturing prices played 82.2 versus 80.5. So that is an ISM manufacturing PMI 56.1 versus 54.5. So that, I'm wondering if it's that or if it's the Bank of Canada that's pushing the treasuries down. I'm gonna play with this. Oh, whoops. Oops. Okay. I'm gonna play with this on sim here. This is showing some action that I think is favorable to me here in the treasury. We can try pulling a few out here. Not bad at all. that series, that was, how many was that? Almost 5. And it is starting to reverse where I wanted it to. If that's the low of the day, I'm going to be super impressed, but I don't actually think it will be. Okay, so people thought Mt. Gox was going to take down crypto. Well, but it did. Like you realize that if it was not for Tether, they probably would never have made new highs in cryptocurrency. Like Mt. Gox was really that devastating to the case. And if Tether collapses, that really might be the end of cryptocurrency really for good at that point. Get out. It's a sim trade. Let's not panic too much. But my working theory right here on the treasury is that this is just a knee-jerk reaction based on the headlines, and that the selling order flows that we're getting here are going to be relatively short-lived. But I'm going to be, keeping it relatively tight here. So like not getting filled at for that time is not a good sign. I'm not so sure that I want to add down here because I'm concerned about like 119 even, right? So I could add like 2 or 3 there and then try and average it out. Because I'm being a degenerate here with the sim trades. Well, the 6J definitely moved down and the dollar moved higher, man. Ooh, that really moved. Oh, okay, it's going to come back up. They're not going to go and get my fill. That's okay. So all I've proven right so far is that when the liquidity becomes light, you can get fills really easily. But there's a reason why it gets so light, right? Because it's harder to predict which way it's really going to go. Construction spending low. Was that one of the numbers here? Hold on. Construction spending month over month, spot 2 versus an expected spot 5. That is not good. But the question is, what? So we had a pretty aggressive sell in the treasuries. Was that because of the Bank of Canada rate decision? Because from what I can see, it was in line with expectations. So I'm not quite sure why that would happen. Right? Oh, well, this isn't looking so hot now. Right? Like that was some big orders coming through there. I think I want to puke here. Okay. Oops. Okay, misclick. That was a misclick. You say you doubt it? You doubt that it was the Bank of Canada decision? I don't know. Like, here's the thing: is the construction spending being so weak? Kind of. I don't think that that's hawkish for rates, right? Indices are moving well in terms of the move with the dollar. Well, part of what may be going on here is just that the dollar has been incredibly strong as of late, right? Who's talking? That diamond thing? It's kind of being a little bit difficult for me here now. I don't like that. It looks like it's gonna whiplash me. Okay. I think I took too many contracts on that when it was coming down against me. So I wonder. Hmm. Oh boy. What's this? Okay, S&P 500 is falling out here. Listening to a video from Obi-Wan Kenobi about the controversy over the Reva character in the new Obi-Wan Kenobi series. Yeah, new lows. Are the rates going to continue going up here? Because, I mean, that's already 2 basis points. Yeah, I'm seeing this. I'm gonna go out on a limb here, even though I know this is not like irrelevant to what we're doing here, and I do maybe need to go long interest rates here. Okay, but the Reva character from the Obi-Wan Kenobi series was absolutely terrible. I don't know if it was the actor or the director or the writing, but I just didn't like the character. Okay, has nothing to do with racism because the antagonist Moff Gideon in The Mandalorian, he was black, and I thought he was amazing. Okay, it was just that particular character. Then I didn't like him. I didn't like him, and I think that trying to turn this into all you fans that don't like it are just racist. I think is not fair to the fans. I don't think that's good for Disney here. Okay, that like there's you see they're still going. There's 2.93. Hmm. So I'm kind of in a odd position. So at first I just thought, okay, let's try and market make against it. I did okay with that for a little bit, but clearly now that's not the move. So I had my fun on that. Now I'm thinking, okay, let's come over here. Maybe we should try and go with the momentum, right? Um, I'm a little JP Morgan CEO Dot Diamond. Yeah, JP Morgan CEO Jamie Dimon on the economy. You'd better brace yourself. Negative rates was a huge mistake. Inflation, Bank of Canada near 7%. Inflation will rise in the near future before moderating. Okay, so I don't know if there's more in this. Oh, there's a pretty big order at 25 for sure. We are getting a pullback. Anyways, on the Kenobi thing, I think one of the things that I find really frustrating is that because it's the internet and there's so many people, any time that there's a criticism of something, there's of course going to be somebody out there that says something stupid, right? And it really bothers me how companies and politicians will always use that one example to represent everybody that shares an opinion, and denigrate them based on the misbehavior of one person. It's not fair. And it's not an accurate portrayal. I think the reality here is that the fans did not really like the Kenobi series so far. I'm sure that it was like really heavily watched, but unless like something turns around in the next week, I'm a little concerned for Disney. Okay. So there's more. Oh man. I don't know, man. That was interesting. So that happened because the 30-year just got slammed, right? It didn't feel magical. Well, I'll tell you what I think the problem is. I think that they kind of broke the formula. They kind of broke the promise. So like, the thing with Star Wars has kind of always been that uh, the bad guys are scary. You know, like Darth Vader is scary because he's incredibly competent. And the portrayal of the Riva character, there was absolutely nothing in their portrayal of her that showed competence. And so instead she ended up being like a Saturday morning cartoon character, right? I'll get you next week, Kenobi. That's why I think that so many people are reacting poorly to it. So I don't think that that's necessarily the actor's fault, right? But it's probably a combination of things. But I think that part in particular is probably the biggest factor behind it. And then yeah, it didn't feel magical. I did kind of get that, like, uh I thought that The Mandalorian was great, right? I was really impressed with The Mandalorian, and everything that we had been set up for the Obi-Wan Kenobi series was that they were putting like everything they had into it, and they had a really good story and everything. And that just did not bear out in what I saw on Saturday. You know? It is the actor's fault if they are bad writers and they don't realize the script is bad. That, well, though that's probably a fair observation. I don't know. One caveat that I put on this is that I kind of seems like it's that the Riva character being like really bad is intentional. So I'm a bet. I would bet money that she's gonna have a redemption arc, right? That she's going to realize that her hatred for Obi-Wan was misplaced, and she actually ends up helping him, and you know she has a change. And then after she has a change, she will do something really heroic or something that will really change people's perception of her. I really strongly suspect that that's what's happening, because I see, so something I've noticed, this is again going back to like what gets pushed to you. Conspiracy theory, I know, but uh, I feel very strongly that Disney has some sort of finger on who gets pushed in regards to their content. So like on TikTok, all of the sudden the people that I typically would get for Star Wars stuff, I don't get them anymore. And I get these other people that are like totally all in on everything that Disney does. And they say things that suggest to me that they have an inside track, that they actually know already what's going to happen, and that Disney told them what was going to happen. You know what I mean? And so that's why they are hinting that she's going to get a redemption arc, and that's why I'm fairly confident that she's going to get a redemption arc. And they feel that's why they probably think that in the end people will like the Riva character, but I'm not so certain. I think that if they don't like her already, that you're likely to run into a situation where when she has the redemption arc that people just don't take it seriously. But we'll see. It's interesting. But I guess it's just relevant here because it goes along with the whole conversation we were having earlier about what actually gets shown to you matters, is significant, and the way that our perceptions are constantly being messed with. And here, that's exactly what Disney is doing, is that they're highlighting a very small minority group's racist responses and trying to use that to paint anybody that didn't like their show, and basically trying to say, well, if you didn't like the show, then you're racist, which is not fair to the people, because that the majority of the fans, I don't think, did like it. Could be wrong about that, but I guess we'll see when the numbers start coming, by the end of this series. But I'm going to bet that the people don't make it all the way through the series. Okay, so the Treasury is starting to have a more serious pullback. So I'm feeling good about having not FOMO'd into anything here. I could probably justify a limit fill here. Bank of Canada prepared to act more forcefully if needed to achieve 2% inflation target. Increased risk of elevated inflation becoming entrenched. Inflation likely to move even higher in the near term before beginning to ease. Interest rates will need to rise further. This does sound to me so like, even though the 50 basis point hike was, oh my gosh, I should have taken that, right? Even though the 50 basis point hike is in line with expectations and everything, it seems like the comments in the statement is more hawkish than anticipated. So the flow is definitely down. I don't think that I want to try and reverse this like I was trying to at the beginning. I also don't think I want to mark it into 2.94, unfortunately. Well, let me take that back. I feel the desire to, but I should refrain. Even if there is a possibility for us to go to 2.95, it's not a good price relative. I'm not getting a good entry relatively speaking. So, part 3 is out today. It has such a high production value that it's going to be entertaining even if it has a stupid story. Well, like, I don't know. Like, the thing that I find really weird about it is that I don't think that the story is that bad. I mean, at the moment, it kind of feels a little bland and uninspired. But, I mean, you can work with a bland story. I think that it's the execution of it is what's so dumb, right? Like the thing that really took me out of it, the two things that really took me out of the moment when I was watching those first 2 episodes was one, the chase scenes with the kid. It was like you have like these full adults chasing what appears to be an 8-year-old child, and they can't catch them, and they're running into trees and stuff. Like, it was just like, it was comedy. It didn't. I mean, I know there's a lot of comedy in Star Wars, but it just didn't seem to fit the aesthetic to me, and it really took me out of the moment because it was just so preposterous, right? And then, I kind of lost my train of thought there. Then the other thing that really took me out of it was at the end, Obi-Wan Kenobi escapes from Reva, and she runs onto the platform. He's on a ship, and he's flying away, and she runs onto the platform, and she's like, "You'll never get away from Vader," or whatever, something like that. So everybody's concerned that she knows who Vader is, because that doesn't make sense with the canon, but whatever. Probably they'll find a reason to explain it, okay? But, like, if that was like freaking Darth Maul, he would have just force jumped onto the airplane, and started cutting through the airplane with his lightsaber. Like, it was just so dumb to me. There you go. It's going, and I'm sitting on the sideline. They're going out of their way to do justice to a female character. Their goal is to empower the next generation of women. In other words, they're more concerned with its impact than the story itself. I think that is a reasonable theory, because in reality, I don't think it seems to me. Listen, we haven't seen the whole thing yet. It seems to me that the director and the writers and everything are highlighting the child Leia and Reva characters more than Obi-Wan Kenobi, right? Obi-Wan Kenobi kind of feels like a guest star in his own show, right? And that doesn't make any sense because what fans want to see is Obi-Wan Kenobi and Darth Vader, right? That's what people are interested in. So why the focus on other things, right? Because clearly it's either that you're not looking to maximize the money or you're just clueless about what would make you the most money, right? So yeah. You get what I'm saying? Yeah, that didn't even occur to me. It really does seem weird. Now maybe that changes in the next episodes, but like so far to me, I haven't gotten enough Kenobi yet, you know? But hey, look, like Kenobi, he's been cut off from the Force a little bit. I don't know. But that's another thing though, is that like I kind of feel like that with Kenobi, they're making the same mistake that they made in The Last Jedi. Because the mistake that they made in The Last Jedi was Luke comes out. Luke was supposed to be the hero, and then it kind of turns out that Luke was being a shitbag and kind of had to repent. Was basically the storyline of The Last Jedi, right? And they're kind of doing the same thing with Kenobi. It's not like Kenobi's in hiding and he's still being the most loyal, heroic Jedi that we can all look up to. No, he's in a moment of weakness right now, right? I don't know. I guess maybe putting your character that they're in a moment of weakness maybe makes the story more interesting because you have conflict that introduces conflict. But to me, it doesn't seem consistent with the Obi-Wan character, right? Oh God, this is depressing me. Yeah, wow. But honestly, though, I really think that the thing that took me out of it, like I was saying, I think it's more the execution than anything. Like I'm kind of wondering if that director, because I know that director has done good work in the past, but I'm kind of wondering if they just don't get Star Wars, you know? Like everything that I've seen from Filoni seems great because he seems to get it, right? But the other people, I kind of wonder about. I kind of feel like that you got people that you know, when they were teenagers, they kind of hated Star Wars. They weren't into it, and now they're taking the job because you know it's money and it's the cool thing. Do you think? I think that I've squandered my opportunity here to take anything out of this today. I am quite surprised by the degree of this move. I think that the S&P 500 moving down here is because of the interest rates. I do think, I mean, what I'm seeing here is in line with the market making a move based off of their anticipated central bank hawkishness, increased expectations of central bank hawkishness. I'm a little concerned because we're supposed to be getting like treasury runoff here. So like you're not going to have as many buyers, right? You don't have the Federal Reserve out here as a buyer in the treasuries. So to see such an aggressive down move like that is not really a good sign for the near future. But it's such a dramatic move. 20,000 contracts. I really don't have a really good signal about where is like a safe place for me to take. We had one and I didn't take it. So maybe that now I'm past. But I think part of that is that I've been intentionally kind of not taking on a whole lot of risk this week, not because I don't think that there's not opportunity in it, but that because I've got other stuff going on this week, so I don't really have not in the space to be able to focus on whatever emotional issues may come from taking on more risk, right? Hmm. What's this? I don't think that's where you're getting your information from. There's this guy in Discord that is very adamantly anti-Ukrainian. And it really kind of bothers me. And he was just responding to me a little bit earlier. I mean, what I'm seeing right now kind of is suggesting to me that it could go further. Dude, this move is really like... So like the next kind of area that I see here is like 118 to 21, down to 16. So if we were to fall all the way down to 16 here, that would really be something else. Like we're at the point where, you know, this is either a trend day or it's gonna catch us a spot. So like I don't think that it's the case that I can just buy it anywhere, but I definitely don't want to fight it, right? There are a number of big targets down below us in both the 5 and the 10 that kind of suggests to me that they're planning on pushing this further still. I'm surprised that gold is not getting creamed here. Gold had a pretty big rally early. Now, since the top of the hour, it is coming back. Don't get me wrong. Gold is coming back down, but it is not completely retraced. It is much smaller of a move than what we saw earlier in the morning. This has got to be some puking in this for sure. Well, look, there's like an iceberg right there at 21. So let's try playing this game again. with the way that it's going here, you can get fills a little bit more easily. Okay. Yeah. They're not going to play nice with me. Mhm. I thought that the new squawk was going to say something there, but they didn't do it. Oh, is that waving, Christopher? How are you? A little bit of encoder lag there. Sorry. Yeah. Like as soon as I thought, they're never going to give me my pullback, and look at that. Oh, I'm a little worried about this. Like earlier was like, yeah, 2.94 should have taken it, right? But what I'm looking at right now is like, even if they come back to a spot where I feel like I want to take a trade, it's so volatile. I don't know if I can actually trade it with a live order. Wow, Toyota Motors North America reports May 2022 U.S. sales of 175,990 vehicles, which is down 27.3% on a volume basis. Shorted the dollar? Ooh, you think this is going to come all the way back, man? I'm just trying to reverse it for you guys here because it's obviously reacting to my sim trades, right? No, I hear a little puppy crying out there because he's in his cage. Oh, it's a poor puppy. I want to go out there and mock him because he's such a baby. You've been in the cage every day, but every day you just whine and whine and whine about it. All right. So I feel like the market maker is messing with us because these should be easy fills and they're not happening. I would probably be pretty frustrated if I was going long, but okay, well that's a little better. It does sure look like that the dollar has a possibility of just retracing this, doesn't it? It's been an awfully odd move, right? Should I say awfully odd move? I don't know if that's really accurate. So a very unexpected. Like we knew that the Bank of Canada thing was coming and that markets were maybe being a little bit more constrained than usual because of it. But the reaction that I'm getting to this is like way beyond anything that I expected. And it's to the point where I have a very difficult time being able to position myself effectively. So Stocks and bonds just puked. It's a hurricane. So maybe they're reacting to Jamie. U.S. equity and bond markets just lurched lower in price, and the dollar spiked higher as a combination of headlines hit stagflationary signals from manufacturing surveys. Inflation is sticky, and degrowth is not slowing it. Bank of Canada hike. Canadian yields spike, knocking into U.S. treasuries. Jolts printed super strong, meaning the Fed has more work to do. And J.P. Morgan's Jamie Dimon warned on the economy, it's a hurricane, you'd better brace yourself. Oh, and Fed's quantitative tightening started today. Put all that together, and equities tumbled and treasury yields spiked. Seems correct. Finally, we also note that Fed's Bostic walked back to September pause comments, clarifying that this is in no way meant to be a Fed put. The more bad news you have, the more you should buy. Well, this one is kind of an interesting scenario, though, isn't it? Because under normal circumstances, some of these economic numbers that we're getting wouldn't be so bad. I was reading Zero Hedge there. Some of these economic numbers that we get wouldn't be so bad, except for that basically all of these headlines say that the tightening of rates and the slaughter that we saw in May isn't really fixing the problem, and that the Fed is maybe going to get even more aggressive, right? I guess I've only got 10 minutes, 10, 20 minutes left, huh? And I lost track of time. I'm kind of thinking at the moment that this is going to bounce hard and then at some point puke much lower. So maybe if now that we're kind of working out a little bit better what is driving the orders, and the leading theory that I have is that what's driving orders right now is fears that current monetary policy is not doing enough to stem inflation, and therefore continued aggressive policy by central banks will be necessary. If that's the thing that is driving the orders, I think that maybe makes some of these moves make a little bit more sense. In particular, gold not getting hit that bad and actually is kind of starting to move back up. Is that in that kind of a situation, I would expect commodities to do well. Now, corn is not doing well at all. So that's like a really big wrench in that theory. But, corn is probably reacting more to the dollar. So it may, in the end, move up higher in the near future. So I don't know. I guess we just kind of have to watch it play out. Can I take one there? Cool. Almost immediate fill. Now, I think that another thing that we're going to have to keep in mind is that a lot of activity happened here in the market that uh, I think that we were a little unexpected. We were a little unprepared for. Um, it may be that we just kind of bounce around this area for a little bit. And maybe there are other legs to this, but I think right now the people that wanted to trade did. Could be wrong, but I don't know. It's definitely moderating though. Okay. Feds Bullard speaks later. Well, didn't he already speak? Let's see here. Do I have that on my calendar and I just didn't look forward enough? Well, Feds Williams is speaking. Feds Bullard is speaking. We got the Beige Book. Yeah, we got a bunch of central bank speakers here later. So, ECB's Panetta is in about 30 minutes. So, 4110, 4112. I don't know. So the S&P just, dove about 60 points or so, right? Which again, remember in the beginning I was saying, well, they had a pretty strong impulse long, and then they had a bear move against them. And in the past, during the pandemic era, let's call it, that was a really good sign of a trend day, and they came in and canceled it. So I think that that's a significant kind of break in pattern, right? And I think furthermore that suggests to me that people really weren't prepared for this move today. So it's curious to me because I think this before I was sitting here being like, well, anything really above 3 and maybe even above 2.9 kind of seems to be attracting buying. So maybe we could see that today kind of suggests otherwise to me now. Today kind of suggests to me that we could see rates spike in a real way now because the market is starting to think that this scenario where the Federal Reserve has to like hike well above neutral and so forth is becoming more likely. Right? That's kind of what's going on here. It does look like they're giving me a slightly better pullback if I really wanted to get involved. I think that given my own current risk tolerances and the time that I have allotted to me, even though I'm really tempted to take it, I think that I'm just going to turn the live account off and just not have ended up taking any trades today, which really sucks because I could have made money. But you know what, though? Like the first trade that I took earlier today was a good trade. The one that was supposed to be on live and wasn't. That was a good trade. Ooh, there it is right there, 2.95. Somebody just took a big swipe at it. That could be the spot. Be kind of hard to get filled at 2.95 right now, though, I think. You think the short opportunity has passed for today? That might be the case. Or at least for the next like 30, 45 minutes, right? But I feel that this action kind of puts me back. And, before I was kind of favoring longs. I think that this kind of puts me into a situation where tomorrow I think that I'm more anticipating selling in the treasury now, right? Because like the Fed may not be saying anything that's like, oh yeah, we definitely need to be even more aggressive or anything like that. But like the data and what the other central banks are doing kind of suggests that they're going to have to end up doing that in one way or another. And when we
Block
come
sell.
in, oh geez, look at the S&P 500, you know, we're kind of just a little bit below the support area. That's like a significant break in the trend. It doesn't make the chart look very good, does it? So, you know, this is a scenario where, if you think this is a bear market rally, you're looking for a little bit of momentum. Yesterday was a good day to start and you didn't really get anything out of it. Here today on this move, yeah, you would have wanted to have gotten in somewhere on that, and the higher up you got, the better. And I think that right now there's plenty of room for you to get short the treasury. Is just that, for us, and from a scalping perspective, the risks of having a move that's 20 bucks against us is a little bit too high. See, it looks like for the time being that the bulls are winning out here. Well, you do have to wonder how many people are going to want to say, yeah, I don't want to mess with the other central bankers given the situation, so let's just get out with what we made, right? So we should start thinking about what we're going to call today's video. Let's just say stocks puke on renewed inflation fears. And they seem more content to hang out at this 24.5 though. I would have thought that it would be more 23 because of how much volume traded there, but that doesn't seem to be the case at the moment. Wow, Pepsi pulls out of the NHL as Gatorade opts not to renew its sponsorship with the league. We saw them back out of the Super Bowl halftime show. It seems like they're really evaluating where they're spending money when it comes to sports marketing. Well, I don't think that people watch nearly as much sports as they used to because they're not on YouTube. But if I could watch it live on YouTube, it would be a different story, wouldn't it? Well, now they're kind of trickling a little bit into 25 and threatening 25.5. There's a big order up there. There is a little bit of a hole below them, though. I don't know. These fills down here aren't crazy, but we're probably going to have to wait. They're probably not going to get filled until long after our trading session ends. Our stream ends, rather. Okay, so let me read this quote from JP Morgan again, from Jamie Dimon. It's a hurricane. Everyone thinks the Fed can handle this. That hurricane is right out there, down the road, coming our way. We just don't know if it's a minor one or a superstorm Sandy. Well, I think that seems like an accurate assessment of the economy, that like we are getting a slowdown and we're just not sure if it's a full-blown recession or if it's just a small minor pullback, right? So the market may be overreacting to that one. It's very curious to me that the market reacts so heavily to what Jamie Dimon says these days, isn't it? Well, I wonder why that is. Cord cutting is a scam. Instead of paying one cable company, you pay 5 to 10 streaming service companies, and the total cost is, well, not quite, because if I get like Netflix and Disney Plus and what would be one other one? HBO Max. Well, I get HBO Max for free with my AT&T. So I pay $40 for those services, and cable was like getting from like 100 to 150 depending on how good of a deal they were giving you, right? Hulu, you don't pay for Hulu. You don't get anything good from paying for Hulu. And they still give you advertisements if you pay for Hulu. So that one sucks. Amazon, I do have Amazon because Amazon Prime, which my wife uses way too much. Oh, I forgot. She gave me a light and I didn't pull it out and look at it. Actually, I'll do that here after the stream while I'm watching the baby, because the baby loves putting things together. But yeah, it's the live sports. I guess HBO does have some live sports, but I've never been able to find, like, whenever I'm interested in watching a live sport, it's like I can't find it, you know. Jamie Dimon wants to buy lower. Listen, if I was Jamie Dimon, I'm trying to do some mind reading here. I'm going to bet that Jamie Dimon is probably a little surprised that the market reacts to him as much as it does. Like in this situation, I don't think that we can say that like the market is moving down because of Jamie Dimon, right? Like we got like 4 pieces of news all at once there that maybe all contributed to this move lower. Although I do think that the Bank of Canada rate decision was probably the most significant. But you know, earlier in the year when Jamie Dimon was like, well, I don't think that the Federal Reserve is just going to do I wouldn't be surprised if they're going to do even more than that, right? And the market really reacted to that. So I'm going to bet that Jamie Dimon is a little surprised that the market has started to react to him as strongly as it has. And something that I notice happen is like when a person speaks, like what happens is it's like the keyword. It's like when there's a piece of news comes out and it ends up having a significant impact, then all of the robots pick up on that and start watching for that term and start placing a bunch of trades anytime that the keyword comes up in the future. So next time that my news squawk says Jamie Dimon's name, I'm going to bet that the markets are going to react, right? That definitely is driving some flows, right? That happened a lot during the trade war years, months, whatever it was, era. Let's call it the trade war era. And I think that eventually some of those robots got screwed over because they kind of stopped doing it. And now it's picking back up again with Jamie Dimon. That's funny. I think these kind of people are really planning when they are publishing this kind of news. They have their incentives. Well, I don't know about that, man, because when I read the actual comment and everything, it does not seem to me to have the same kind of connotation within context that the reaction in the markets and the commentary on Twitter suggests it would. Yeah, quantitative tightening might be a factor here, live action. So with the quantitative tightening, doesn't mean they're selling though, right? I think that it's more they're letting stuff roll off. It just means less buyers. So I don't think that what I think it would mean is that when you do get a wave of selling, and we're moving to the downside, they're probably going to make it further than you would normally expect, right? That's what probably the effect of that one is going to be on the orders, because that's going to be a largely passive flow still. So kind of makes you wonder, though, with everything that we had, why we had some relatively aggressive buying at the beginning of the session. It was relatively aggressive. Actually, I would say that initial move up was incredibly aggressive, you know? They are taking money out. I need to read into a little bit more about their operations, because if they're selling into this from day to day, then that could be like massive. But well, anyways, it's time for me to get going, guys. So that's okay. We're still basically break even on the week. Kind of fun, I guess. But I will see you. Yeah, of course not on Sim. On Sim we did terrible. I played it terrible on Sim today. So I will see you guys tomorrow. In the meantime, stay profitable, friends. Don't do the listen. This is a great example of where taking on risk screws you over, right? This is screwing around. You shouldn't do this, right? But it is fun. It is fun. I don't know if it's really the QT that's causing all this live action. I'm really not sure about that. I'm going to do a little bit more investigation though, and see if I can come up with a convincing argument that for why it is or isn't. All right. Okay. Later.